The US economy has gone backwards in the first quarter of the year, bringing it technically to the brink of a recession. Business Editor Ross Greenwood is here to explain. Ross, good morning. I know most are saying that the prospect of the US falling back into recession is unlikely, though.
That's true, but then you've always got to be a bit cautious about what happens down the track, because remember, it's 2 consecutive quarters where the economy shrinks is a recession. In this case, the US economy has contracted by 1.4% in the first quarter of this year. Now, that was largely also affected by supply chain issues, plus closures with Omicron coming through. And so it really, as you can see, it's not as compared with the big hits that the economy has taken in the US and then the big recoveries. So this last one that you can see on the right-hand side, there is just literally a blip. Now, it is fair to say, however, that the US Treasury Secretary, Janet Yellen, has said, look, we're not so worried about now. It's later in the year we're more concerned about. That's the impact of rising interest rates. That's the impact of the rising prices in the United States with its inflation now getting out 8%. But the other point also is Joe Biden overnight, the president, has said, look, we're always worried about the prospect for a recession. It's not what we want. But he was also pinning his hopes on small business, creating more jobs and more spending into the future. Have a listen.
These enterprises and entrepreneurs know that American economy is strong because America's small businesses are strong. Small businesses typically account for more than 40%. People don't realize that 40% of the gross domestic product in the United States. They create 2/3 of all new jobs, and they employ nearly half of all the private sector workers.
So does this stop the US Federal Reserve raising interest rates next week as expected, Ross?
No, it does not. No, in fact, the US Federal Reserve will almost undoubtedly raise interest rates by 0.5% next week. And of course, this is increasing the pressure on the Reserve Bank here in Australia to do something similar, especially in this election campaign. The reason for that is that the US Federal Reserve has got to get on top of inflation in the United States, because if it does not, then there's the prospect of even more interest rate rises going into the later parts of this year. And that's where the real risk that Janet Yellen was talking about to the economy, to that risk of recession later on, because the risk of recession in the United States is increasing, and that's because of those spiralling prices that really businesses are having trouble to control and consumers clearly are having trouble to afford. Similar story to here in Australia.
Sure, yeah. And markets seem unperturbed by the economic numbers, Ross. The stock market seemed more focused on Facebook owner Meta's better than expected quarterly profit.
Yeah, and the shares boomed. And so as a result, tech stocks in the US, a lot of stocks across the broad market basically improved significantly. Now, we sort of had a flavour of this yesterday, because we know from after hours trading, after those results were better than expected, that those Meta shares were going to have a cracking day today. And so you can see here that just a short time ago, those shares, in fact, at the close of the market were up 17%. So that's one of their very best performances since the early 2000s. $205.73, a big day out for Mark Zuckerberg. But remember this, those shares had been down 44% this year up until that moment when they started to rise last night.
Yeah, right. But the news is not so good for some of the other big companies, Ross. Staggering figures that have come from Amazon this morning, Apple too. So how did they fare?
Yeah, well, big losses at Amazon, but that's not unusual. Amazon often loses money. It doesn't pay dividends, but it had fallen from a $9 billion quarterly loss. Now, in this particular case, you can see here in after-hours trading. So this is not the official trading. These figures came out, the quarterly loss after trading closed, but there's after-hours trading in the US. Its shares now down almost 10% since that time. So that weighs on the US stock market tomorrow. The other one also out there is Apple. Now, Apple's performance is improving. Its revenues were up by some 9%. But again, its stock price has fallen in after-hours trading. So while it was trading normally, things were okay. It released these results, and again, showing that revenue was up and it was better than expected, but the share price has certainly taken a hit as a result of that. So that may weigh on Australia's market, which otherwise was expected to open higher today, but it's just a matter of what impact those results have on the Australian market here as well.
OK, so let's finish on the key question here. Does the Reserve Bank raise interest rates next week?
If it doesn't, it should. If it doesn't, there have to be serious questions about the role of the Reserve Bank. It's got to get on top of inflation. It's behind the curve. Its forecasts have been wrong. And the fact of the matter is, it's inevitable now. All four banks, big banks, now believe the Reserve Bank will and should raise interest rates on Tuesday next week.
One or two, do you think?
No, it'll be only 0.15%. It'll take the rate out to 0.25%. And from there, pretty much, it's going to be 0.25% or its equivalent all the way out until probably November this year. They'll keep raising interest rates every month.
OK, there we go. Ross Greenwood, thank you. Talk to you soon.